Good morning, everybody. 15 minutes is not enough time really to kind of cover everything that we're seeing in the marketplace right now, so I'm just going to fly through things pretty quickly. Feel free to ask me questions later or catch me during lunch if you have anything specific that you want to talk about. I am going to focus mainly on corn and soybeans because that's kind of what we see in terms of around our area. If you have questions regarding any other crops that are in the marketplace, again, you can hit me later on with the discussion session or catch me at lunch. So with that, we're just going to get moving right through things right away. First off, immediate thoughts on the market, and I apologize to the people over here. I'm going to turn the face so you get to see my better side. But with that, volatility is here to stay, okay? Again, the big questions in the market right now, where's the demand side of the equation? Where are our corn and soybean supplies? Do we have enough? Are we going to be tight? Okay, what's going on with that South American weather that's been the leader of the market moves so far this winter here? Okay, lastly, too, the elephants in the room. What is China going to be doing? What's going to happen with our U.S. economy? It was a great presentation by our previous presenter regarding look at the possibility of recession and things of those natures going forward. And then I'm going to spend a little time just kind of thinking outlook here into 23. First off, the last year has brought a lot of price volatility. This is the March corn chart. Basically, you can see our run through May where we put our high in, again, influenced a little bit by the Russian-Ukraine war as well as South American weather at that time frame. And now we've also seen things kind of come back down aggressively, and now we're back up in here where we got some good price support. This is the soybean chart. Again, same type of volatility in the markets as we dealt with U.S. weather during the summer months. And again, this latest rally here because of what's going on in South America. But the biggest thing I want to make sure people understand that we are still trading at historically good value here. Okay, you go look at continuous charts multiple years back. You're going all the way back to 2004 or 5 on both of these. Again, you can see where we are in a historical level in terms of prices that are available to producers at this time. Paul covered some of those break-evens. So one thing I'm stressing with my clientele right now is making sure we take care of those margins going forward to protect yourself. Keep your price flexibility open. I'll touch that in a little bit later. Where are we at? We call this basically our cycle of emotions. I would say we're kind of in the anxiety area right now because everybody's wanting prices to go back up. I sense that from my producers. They're like, we don't want to get defensive. It's going to go back up, maybe. Okay, so we're kind of working at that phase. I'm a little more concerned that we do get into that fear and depression mode if prices continue to slide we are. So going forward into 2023, again, I'm going to cover supply demand. Okay, the demand-driven market, where are we at there? I'm going to touch on the macro environment just briefly. Again, it's a lot bigger topic than I can cover in this time frame. Weather, and is also what's going on with that South American crop that's coming at us relatively soon. So first off, U.S. supply picture. Ending stocks are still historically low. The USDA pulled a little curveball in the last report, cutting acres by 1.6 million for corn, dropping yield by 6 cents a bushel for soybeans. Really caught the market by surprise, as I think a lot of end users thought things were going to get larger. That's got that price jump that we've just seen recently. But again, historically, we're still extremely tight compared to where we've been in the past. The numbers I always look at is what we call stocks to use. That's how many days available supply do we have in terms of corn and soybeans. Corn's still a little bit under 10%. Okay, if you look at it historically, still relatively tight overall. Soybeans are still extremely tight around that 5% window. Excuse me. That means basically we got about 15 days of total supply available to us, and that's some of the strength that we've been seeing in the marketplace in terms of soybeans. The other thing that comes into play, we got to look at the global scale. Corn, at least in the last 5-6 years, we're still relatively tight compared to demand. Some of that's the lack of the Ukraine supply that is not going to come back online anytime soon, even if things do resolve in that country with the Russian-Ukraine conflict because of the damage to the infrastructure and things of that nature. Again, bigger topic for this time frame. But then on the same side, you go look at world soybean supplies. We're expecting that number to jump significantly because of this monster crop coming out of Brazil. What's been doing our strength in the markets right now? It's been the cash markets and where things are there. We've got some very good cash markets overall. Paul kind of touched on those a little bit. If you go look at corn, we're trending well above the 5-year average in terms of the high side as basis levels have continued to stay strong across the entire Midwest. Soybeans, same as well. We still have very good basis levels on a national average price, again, trending well above the 5-year highs. That's, again, due to a couple different factors. In corn, it's the east-west issue. The latest USDA report and grain stock numbers showed about a billion bushel shortfall of feed usage or feed-capable grains needed in the Western Corn Belt that is not there due to the drought conditions from this last year. Okay, that's a lot of trains I got to get from east to west. Okay, so that's one of the things that's been supporting that corn market right now. It's just been the competition for the domestic demand versus the export side, keeping prices elevated. Unfortunately, that has carried over into our lack of export sales, and that's something the market is highly concerned about at this time frame. As of the last export sales numbers, we're at 911 million bushels for the market year. That's down 46% year over year. Now, will that number come back? We will see. Okay, but there's still some time involved in terms of that at this time frame. But again, supplies are tight, needs to move domestically. It's not available to the world market because Brazil has stepped up in selling its corn, and we'll touch on that in a moment. Soybeans actually in pretty good shape. We're actually up 5% year over year at this time frame. A little surprised USDA actually made a cut on exports in the last report because right now we are actually ahead of their target pace, but they're counting on that big Brazil crop to slow our export pace down over the summer. Biggest one, though, for corn is the competition from Brazil. This will be the year, probably midway through the year, Brazil will pass the United States as the world's largest corn exporter. Okay, they signed that agreement with China this past year. China seems like they want to do everything they can to not buy U.S. corn at this time frame. The market is waiting for that. Okay, if you look at the final chart on the backside, 2020, you can see the impact. The yellow bar is the impact of Chinese demand on corn exports. That hasn't come to the market yet this year. The market sees a corn sale to Mexico, it doesn't react. They want that Chinese sale for that extra strength. And until we get that, I think corn prices, we're going to probably stay fairly subdued because of the fear of losing more export demand with these levels that we're at. So we got to look at the domestic market. Ethanol production is a concern. We got another cut on the last USDA report. That was production at the end of the year. Obviously, the weather that we had across the Midwest the last week or two of December really impacted the amount of corn flow and production of those ethanol plants. Soybean crush is something I'll be touching on here shortly, running at a very strong pace and probably going to be something that's going to get even stronger. That's been one of the factors in the domestic soybean market right now has been the crush pace and that demand for biodiesel that's growing quickly. Shell Rock, Iowa opened a plant just a couple of weeks ago, 40 million bushels. That's 800,000 acres of soybeans that they're going to be crushing on a yearly basis. We've got more plants coming online, as you can see, across the entire country. We could have very much an impact in terms of that crush coming in and supplanting that demand we may lose on the export front. One of the biggest factors has been crush margins are very good. Obviously, I put this chart up after yesterday's drop in soybean prices, but still $1.95 a bushel is their profit margin, so they're still willing to pay up for beans at this time frame to meet that crush industry, and that's what's keeping this market supported, given the fact we got only 200 million bushels of carryover out there for U.S. bushels. Couple of quick things on the macro side. U.S. dollar index really hasn't been a big factor if we think that it has been because of the inflation side, and that's a whole nother presentation. But now lately we've seen the dollar coming down, getting back to multi-month lows, maybe bottoming out here a little bit just because of the Fed policy and money flow, things of that nature. But it has helped at least wake up the corn side of the export market here recently. So that's going to be a concern. Does that continue to trend lower and give us more support? Or are we finding some bottom and just maybe rounding this thing out? I'm very concerned about some of the outside markets. Crude oil on the far side over there has been on a downtrending market, maybe finding a little stability since the talk of the Chinese reopening from COVID's helping out in that regard. But I'm watching the equity markets very closely. To me, that is a chart that looks like it wants to do some correction in terms of the Dow futures. When you get that run to a high and you fail to get that high again, that just tells you the momentum is waning. Again, concerns regarding recession. If we see that do come into play, stock market drops, that's going to pull value out of the markets in general. So that's something we need to keep a focus on. There's a lot of air underneath that stock market if it wants to come down. Moving into also the money flow side of it as well. We always are worried about where the funds are and how the money is moving within the marketplace. I've seen with the issues in Argentina, soybean length in terms of what the managed money is holding is now as large as we've seen over last year. Okay, they are record long soybean meal. Argentina is the world's largest exporter of soybean meal. Approximately 41% of the soybean meal in the global export market comes out of Argentina. Now, Brazil's going to have more than enough beans to keep that moving. Okay, that's where they're starting to source beans from right now to fill up their holes because of weather, which I'll touch in just a moment. So we're a little concerned right now that the funds just say, hey, U.S. prices are here. Argentina, Brazil is going to be here in a couple months. Those prices need to come together. The funds get on the shorter side and push this market down. Corn, excuse me. Corn, meanwhile, has been holding fairly well under, obviously, last year's levels. There's just no play right now. There's no news to make the corn market truly bullish at this window unless we see that demand really kick in, and that's something that's coming forward. Quickly looking at some of the weather going forward, we do have a potential change from La Nina to El Nino. Obviously, the weather events in California are already starting to dictate that as we get this coastal flow coming in, as you can see by what we see for El Nino type patterns. How's that come to a global scale for us? Wetter across the southern plains. Okay, some of the reason the wheat market has been struggling lately, again, with that potential for moisture coming in. South America does dry out. We are seeing the patterns change in Argentina, which I'll touch on in just a moment. That's some of the reasons for the most weakness. I'm going to be watching that possibility for dry northern Brazil, more for corn, and it's finishing come this summer if this is truly the pattern that we're going to see. We'll see rapid harvest, rapid planting pace. We'll watch the weather as we get into the finishing cycle during their, that part of the season for the safrinha or the second crop Brazil corn. Quickly, in terms of South American weather, Argentina has been the issue. As you can see, northern Argentina is an extremely large growing region. Again, it's been extremely dry. Now, we've had markets have really jumped us off this potential. We've seen that crop come down very, very quickly in terms of size. Over the last week, the weather models seem to be changing to a wetter pattern. The market knows the crop's still going to be smaller, but it may be stabilizing now. The later planted beans out of Argentina are going to probably come together fairly decently, as well as the corn, and that's some of the reason we've seen pressure over the last week or so here in the U.S. markets. Again, the biggest concern in terms of those markets is going to be what's going on in Brazil. I'll touch on that in a moment in terms of this monster crop that looks like it's in very good shape. 2 minutes, okay. All right, first off, U.S. drought monitor is a big key. Still got to watch that weather going forward in terms of where we are. Again, quick breakdown. 47% of current corn acreage, 39% of current soybean acreage is in some form of drought yet, still in the United States going into the planting season, so we'll have to keep an eye. So my last couple slides here, again, there's that South American production. Brazil and Argentina, even with the losses, we're going to have approximately 20 to 25 million metric tons more soybeans out of those two countries this year than we had last year. So again, that's my concern on the soybean side of the market. My last slide, just go through things for next year. First off, volatility is not going anywhere. Price flexibility is something I talk about constantly with my producers. As Paul mentioned too, instead of worrying about how high prices can go, take advantage of the opportunities there, manage the risk, protect the margins that are in front of you. Again, stay disciplined, build your base with defensive strategies, cash sales, but leave your price flexibility open because we're one good week of weather away from things taking off again. Again, opportunity, own potential, use defensive strategies such as puts underneath your market. And again, make sure you measure the risk of doing nothing versus doing something, because right now I'm looking at a potential $1.50 drop in soybeans if the things fall together the way they could, and that quickly will drop out of those margin levels that are out there. So with that, thank you for your time, and have a great day.